Hello everyone, welcome to another weekly market review. It is the 4th of October 2020. The market has been going sideways and chopping everyone up, but seasonality says that there is a decent probability for a move up. Let's look at our game plan for this week. Looking at the total market cap chart, so on the weekly time frame we can see that we have had a couple of red weeks, but look at the wicks down here. There is still a lot of buying pressure, and you can clearly see it reflected by the wicks. What as a bull you do not want to see is a weekly close below 321. I'm sorry about the values, and this is something that you should keep in mind and take care of. It's just TradingView has done something with the values just since last week, because this quarterly level and this key level where price actually found support was 300 billion for us, but I've had to move everything up by 8 billion just so we get the same levels that we did have previously. So that's just something to keep in mind. Let's go down to the daily. So on the daily, this is what we had as the game plan, the scribbles that we have from last week. This is about where we were this is about where we were last week. We got a bounce from the quarterly level, and we were making potentially another move up. And what we were looking at is, quickly go to the 4-hour to see it better, because the VWAPs are here. We are looking at this zone of VWAPs which has been acting as resistance, and the game plan was that we come down, we test this daily level and move back up, and only once we flip this set of VWAPs along with what now is the October monthly open, we can really confirm a nice double bottom shape, and looking for upside. This would look like quite a clean W once we have done this. But for now, as a bull, that's what you want to see. What else is peculiar is we do have these equal lows down here. So I would say there is still a probability to come down, sweep these and break back above, and then make this move. And for the bearish case, what I would say is that price does need to break below this quarterly level where we've made these lows. We basically tested it for 3 consecutive days. The second test, you can see it has been more bullish, just a quick move down and a decent reaction. So I would say if price is to get bearish and you need to flip bias to start looking for downside, you do need price to come back down, not get a reaction here, and start flipping this level into resistance, which is also the VWAP. This is the VWAP from the May lows. This is just pre-halving, very emotional time, and you do know we made this is also a 618 retrace of this entire move from the May lows. So very nice confluence on this level. So this is what we're looking at. We want this level to break. We want at least a daily close below this, and this level flipping into resistance if we need to start looking for downside. Until then, this is the place to manage risk from. If this is a higher high and we are making a higher consolidation after getting the first rejection, we could be looking for a sweep of the lows and then eventually a move up. You want a confirmation, you want to play this safe, and you are not confident in this current range, then what you should be looking for is this flip of the VWAPs from resistance into support, and also the monthly open. So there's a good confluence here for resistance. Once this flips into support, you can take that later entry for a confirmation and a move further into upside. In terms of seasonality, what we have is BTC. In terms of seasonality, what we have is BTC being strong in October. Bitcoin dominance being strong in October. So that is something to keep a lookout for, and it suggests that if there is a move up, there is a probability that BTC would do it along with a few selective altcoins. We will talk about those slightly later in the video. So here's the altcoin market cap, and what we've had since the big drop we had in the first week of September is basically a long drawn out sideways. You can see the quarterly level has held on a weekly closing basis. Again, just like the total market cap, lots of wicks, but because alts against BTC have been taking a bit of a hit, we don't have that bounce that we got on the total market cap. So on the daily time frame, something similar. I mean, it is still quite similar to the total market cap, but what we've had is we made a low, we broke the high that made the low. This is the high that made the low on the daily time frame. We made a higher low, and since then we are basically squeezing or consolidating. So just a similar perspective as the total market cap. You want to start looking for downside, you need price to break below this 120 weekly level. You can start looking for downside. And this is still the sideways and the chop zone. And what we have for upside is, once this very clean and clear resistance can flip into support. So this is basically what we have here, is this tight range area, and directionality can be defined through these horizontal, quite clean horizontal levels. On the altcoin market cap, it's much clearer than the total market cap. So you want to not bet. Otherwise, in a range play also, guys, it's pretty simplistic. If you can long the bottom of the range, and you can also be topping or shorting the top of the range. So, you know, or if you are still looking for swing directionality, you can be taking profit at the top of the range. So if I was accumulating down here and price does end up hitting this 144 weekly, I would still be taking some off and eventually only compounding once we flip this into support. So a couple of key levels: 120 weekly as support, 144 weekly as resistance, and they are defining this tight range that price has consolidated for a month. And once we do move out of this range, we can expect expansion, considering everything, including the macro, the directionality. It should be positive. If you look at the weekly again, you can see the kind of base that we had built. Price had built this base over 2 years. We've had a strong breakout and we've made the retrace. So this does look legitimately possible that this base and breakout after consolidation should get a continuation. So this is the plan for the altcoin market cap. If you are not choosing any kind of directionality, you can wait out and wait for this range to play out and then allow the market to show you. If you are bullish, then I suggest that you should be trying to long as close as you can to this bottom weekly level and looking for upside. Of course, if this range, we cannot perfectly time how long this range could take. You can see the previous range that we had from May to essentially from the 1st of June till essentially it was the I would say the second week of July. It was still a sideways without a confirmation, but you can see that once we did break this range to the upside, there was a possibility in a small flag to take a risk adjusted opportunity, a long opportunity for the upside. On the other hand, if you could recognize what the bottom of this range was, there was still decent probability to be longing as close to the bottom of the range and managing your risk from there. So this is exactly what we're doing. We have made another impulse and built another range, so you could be longing the bottom and managing your risk from here. But if you prefer to not be in any trade while price is ranging, allow for the range to break to either of the directions and then make your trade. Here we're looking at BTC. This is on the weekly, and what you can see is the weekly block that I had highlighted. But what I want to show you just on the weekly is this previous week. And I mean, this is an index. This is mostly the spot index. It does not have much leverage apart from Phoenix, and Kraken probably would have some leverage, but it's all low leverage. So I like using the volume on these exchanges. And what I want to show you is this is the previous week. This is the week where the CFTC has charged BitMEX, and I want to show you, look at how low this volume is. And everybody who had a lot of fear, they had to ask some questions to themselves. I mean, this is essentially the move. It was, I think, the first day of October when this happened. But everybody had to ask themselves that who was selling over here, you know. Okay, first it was speculative shorters, possibly. But outside of that, the real sell volume came from most of the traders who were long already. They were long BTC on BitMEX. So they were closing their longs because they wanted to withdraw their money, right? But they were long already. So you need to understand that. Why were they closing their longs? It was not because it was a technical reason. It was to protect their funds. You know, that was what the reason was. There was no technical reason to close longs wherever they did. So essentially that is the question you needed to ask yourself, you know, who is closing the trades, who is closing longs, essentially it was basically BitMEX losing about more than 100 million in open interest. You know, I think it was about 150 million if I'm not mistaken, which was, I would say, about 90 million, about 100 million in longs and about 50 million in shorts. So that was the only reason why, that was the reason to close that trade. And if you're looking at shorter time frames, I just want to show you the 15-minute, because we had a plan from the Discord. We had a plan while BTC was in this range. This was a 1 week range on BTC, and there was pretty clean equal lows over here. So I had plotted out the point of control of this range, and we had plotted out the 100x, 50x and 25x liquidations. And essentially what we did is we got the 100x and the 50x. There was potential, and there still may be, but you know, we have taken liquidity down here, so we cannot be sure if price will come back. There is a probability that, you know, we can just possibly get a golden pocket retrace right here back down to 10,500, sweep some of these and move back up again. But essentially this is what the plan was while price was in this range. It did look a bit like distribution the way this range was playing out, and there was leaving a lot of equal lows down here. So it did look like a decent probability that price will come down anyway, you know. So there was a technical reason for price to come down, you know. But beyond that, I mean, in terms of the number of longs that got closed and what was going on, there wasn't much of a technical reason for price to do that. In fact, I mean, essentially the technical aspect and what we played in the total market cap was to see this, you know, we had lows, a price came down, took out these equal lows, you know, gave a brilliant reaction, broke market structure. So what you're looking for is another higher low, and that's essentially what we got for now. You know, there's a decent reaction. The lows were about 10,380, and we've got a reaction to, I mean, it's almost $400. So that is a decent reaction. And I would say what you would want, just like in the total market cap and the altcoin market cap, is for price to break up above these quarterly levels right here. Let's quickly look at the anchored VWAPs. Let's look at if we can form some VWAPs. I would say possibly from the beginning of the previous range. Yeah, even the August top was very emotional and very significant. So we're getting this general zone of resistance where essentially the VWAPs of this range, very much like the total market cap chart, would be coming up around here, the 11,100 to 11,300 level. And what I would say is this previous support which flipped into resistance, it's quite clean as a zone. This has been a clean consolidation. A lot of times BTC is slightly more complex in the way it moves, but you can see that it's quite clean, this zone. And I mean, it has all the VWAPs of this range would potentially be in and around this zone. So if you really want to flip bull with a confirmation, you want price to move up here and flip this level of 11,100 into support. Once we can do that, you can be more confident that of the directionality of price, because outside of what BTC has done here, there isn't much reason to flip this into support unless price has the intention of moving further up north. If price does move further up north, which in terms of this declining volatility is something that is a potential possibility. If price does end up doing that, I would say that there is potential to head to this 2018 yearly open level. This is the big level, and I think once price does get here, you can see that we would form a very big base. I don't think that this can be broken in the first go, but I would say that if price is finding support over here, you can have this strong 12k level as a first target, but eventually I think there is a decent probability that we could hit this 13,800 quarterly level before reconsolidating on BTC. So I see no reason to be bearish down here. There's a great level over here to manage risk. There's essentially 1 2 3 4 5 6, so almost a week of heavy selling pressure that was very cleanly absorbed. And you can see, I think this was the couple of weeks before when we had this. I did mention this level, this 10,150 level. You can see how many daily closes we got right here, and this is something that faked out a lot of people. This daily close, if you're trading using closes, this daily close faked out a lot of people. But what you have to understand is that this weekly block is the actual block, which is the genuine place where we have found demand. So this is the block for bears to break. We start closing below this, we start closing into this block, that would flip my bias for downside. But until then, this just looks great. This looks great for a nice consolidation. The sentiment down here is excellent. We've had negative funding for quite a long period of time. A lot of bearish sentiment across the board. So everything is really good for what this is. This is essentially a very strong move up, and we've basically been in a trend. We flipped a very important level into support, and currently we are reconsolidating. This does not look like distribution to me. There is a lot of absorption going on. If you do look at volume and the volume analysis, there's a lot of market selling which over all of September has just been getting absorbed. This move down had very strong selling. This was completely absorbed. This move down, I mean, essentially it had very strong selling, but it was for a different reason, but it has gotten absorbed as well. So there's massive price absorption happening on bearish news, a lot of negative sentiment. These are the things bottoms are made out of. People were chasing price all the way up, and everyone wanted a big retrace to catch a technical level. The thing is that a lot of people are looking for that big 30% retrace, which would have been a potential possibility. We could have been looking at that, but price has done something different. So there does not need to be a bias of how much price has to drop or where it has to drop to. What we need to look at is where price is getting absorbed, what are the levels that are getting respected, how significant these levels are, and what price is doing once they have been settled. So this level was settled for massive absorption as support. It came back down. The reaction is pretty swift away from here. So that is adding to that perspective that yes, there is demand down here. All the market selling is getting absorbed, so there is demand down here. So for BTC, this is the plan. if you are not long already, essentially you could be able to manage your risk from this 10170 level if price can come back down here. Otherwise, if you do end up starting to see strength, it is possible that this is the range where this range POC that you're looking at, this is the range where it is for now. We've already gotten a reaction here. If we do get another retest, you can start looking for upside even from here. But the real level to manage risk, I would say, is this set of daily closes, which has given a very good reaction, which is about 10,150. This is the place to be managing risk from. You start getting daily closes below that, you do end up getting a bit defensive. But again, if price does come back down here, this is again a great level to manage this. You can see the demand that has been printed here. So that is your scenario. For upside, you should be looking for this level to flip into support, and then you can be a confirmed bull looking for that bigger move to 14,000. So now we're looking at alts against BTC. What I wanted to show you here is this is 2014, 15, 16, 17, right? 2018, we essentially didn't get any moves like this. So 2018, 2019 was quite bearish for alts against BTC. But in terms of the number of days that we had where alts really outperformed Bitcoin, there's 96 days, 136 days, 68 days, 116 days. So if you count it from May, post the halving, we had this 104 days where alts outperformed BTC quite heavily. So we've had our customary, what we would call alt season. Outside of that, one interesting trend line that I have, which has been quite valid. This is a very valid trend line. You can see how well respected it has been. So we did have a couple of fake breakouts, and what currently we've done is we have broken back above. We're trying to flip it into support. This is something to keep a lookout for. This is the only, essentially technically potentially bullish scenario. Essentially trend lines are just indicating momentum, so this was very bearish momentum, how the distance from the trend line. So we're just kind of catching up to this long-term trend line. What I'm going to do is move to the monthly just very quickly. I'll move to the monthly. Just need to hide these because I have something else to show you for the monthly, and this is something you could also see on our Twitter, on the Subverto Twitter from last week. But what we're looking at is October. So October 2013, bearish month. All right, October 2014, sideways or bearish month. In a very bullish market also, October was a bearish month. 2015, strong bearish month. 2016, strong bearish month. 2017, another strong bearish month, right? So it's the same. 2018, it's the same. October is a bearish month. 2019 we have a doji in October. So seasonality suggests that this period of September, October, November is generally just not been a good time to be holding odds. This is a time when Bitcoin is dominating. If we look at Bitcoin's monthly performance, October is a good month for Bitcoin, and it generally means that odds against BTC also end up taking that hit, because what happens is essentially is just the psychology, guys. We have a bullish period from it comes anywhere between March to June, or this time we had it from May to August, and you have very, very strong trends, big trends. You have coins which are doing multiple x's, 8x, 10x, and then we get a big correction. Most DeFi coins have done an average of 50% to 55% correction. So what happens while price has gone up is it's created a lot of FOMO, right? And then we get that correction and reconsolidation, and what happens is, because people saw those exorbitant valuations, they're looking to long again once we get back into the dip. So this is a good way for the market to keep at least one of the assets light. So if the market has to pump Bitcoin, a majority of the market would, because alts had very recently proved to be extremely bullish, people would have gotten in heavy into altcoins, because the retrace has come, the big dip has come, and now we want to go again. And the scarcity becomes Bitcoin, because Bitcoin has not been giving the gains that the alts have, because Bitcoin is also been less volatile, so people essentially do not want to trade that anymore, so it becomes the scarcity. So this is what is supporting this idea that there is potentially a possibility that what we've had over the last 6 years, this seasonality, is something that carries on, where if this is a bull run, then Bitcoin continues over here in October and it goes without the alts. So this is what this is still just not enough data to extrapolate, but 7 years is good enough. Otherwise in crypto generally we have very small sample sizes. So this is the biggest sample size we can have in crypto. So it's decent enough for me to use as my strategy right now, wherein I have in this consolidation been focusing on accumulation of BTC and a smaller position in Ethereum. Outside of that, also I have been looking at Zcash for its potential halving volatility. XMR, you should look at the Subverto Twitter. We've just shared a great chart on XMR's breaking out of a 400-day base. And also we have ZIL, which was another outlier which we looked at recently. It's breaking up a key level and from a falling wedge. So these are the alts to keep a lookout for, and this is what we are looking at when it comes to seasonality for altcoins. For indices, we're just going to look at a couple of seasonality charts. This is the last 20 years. Generally, a lot of times we're looking at seasonality. We look at lifetime seasonality. But I would say it's also a good idea to look at the last 20 years because since the last 20 years, the dynamics of the market have changed significantly. So it is also a decent idea to do that. And in terms of the last 20 years, you can see that October has been a great time. If you look at the lifetime seasonality of the tech sector as well, early October is when the market starts moving really strong. What we have, which is special for this year though, that it's a presidential cycle. It's the last year, and we have elections right on around the corner. So that is something that does end up making a significant impact. But if we look at the last 20 years, traders just come back and they absolutely love these months of October, November, and December. So here's something about seasonality. Let's quickly look at the presidential seasonality as well. So here we have the presidential election year cycle, and what we can see in the red is when the incumbent Republican Party wins, when the incumbent Republican Party loses. So here's October right here. And what's really interesting is you also look at the the blue incumbent Democratic Party wins and the incumbent Democratic Party loses. So you can see, first of all, the volatility is much lower when it's the Democratic Party. But one very interesting thing that I want to show you is that you just need to look at how price is reacting before we have the elections, which is in November. All right. So when you can see that price is flat or price is breaking down, it has been a loss for the incumbent party. And you can see when price is moving up, it has been a victory for the incumbent party. All right. And this is the black one is the average of all elections, which shows that essentially October is a sideways month. So I mean, this is just leaving the door right open, right? Because it says that it is possible to get a sideways month, it's possible to get a dump, it's possible to get a pump. But what I would say is, what would be really interesting to observe is what happens in the elections if we get a pump. What happens in the elections if we do get a steep drop in price before. So October, I think the performance of October can give us a bit of an edge in trying to deduce what does end up happening in November. So that would be interesting, unless price does a very cheeky sideways. I mean, this is potentially what can happen. This is where it would be pretty difficult to pick a side and pick something. But if the markets end up showing decent strength in October, I mean, this is again, I mean, it's just a sample size, and it's just past performance is never something that guarantees future results, especially in markets. But we are just looking at patterns because as technical analysts, that's what we have. So this is the last 120 years, and this is what the average price has done. This is what price has done on an average. So that's the best that we have to be able to deduce from. And we have had September, which is well in line with what the averages. We've had a drop, I would say about a 10% drop in September. So there is still a potential. If you do get a bit of chop and get that bigger drop, it is possible. But there are a few things that are pointing to this not happening in October, because what we've had in our breadth indicators is something that I would share right after this, and that does not signify something bearish, and that does not signify that it is what is a higher probability. It is signifying that it is a higher probability that we either build some kind of a sideways or we end up moving up. So we look at the breadth indicators, because I mean, single day breadth again is something that you should take with a grain of salt, but I would say that you should keep an eye on the breadth so that you can add substance to our analysis, that it is a higher probability that price moves up. At the beginning of last week, this is essentially what we got once price did bottom out. We got this big move where nearly every stock in the S&P 500 was green. This was about 93%. 93% of the stocks in the S&P 500 were green. You do not see this often. You see this in bull markets. You do not see this when price is bearish. Though what you would like to see is for price to do this again. But essentially that just reflects the demand, and that just reflects probability of pointing towards and leaning towards continuation leaning towards upside. So this is something to be aware of, and this is why we are also leaning towards a potential possibility of continuation of this rally. Here's something else that we have that further substantiates our potential for continuation of a strong fourth quarter. And basically this is the big third quarter, that bodes well for the fourth quarter. You can see quarterly gains more than 7.5%. We have done a third quarter gain of more than 7.5% 11 times, and 11 out of 11 times we've had a positive fourth quarter. So a percentage of positive, it is 100%. 11 out of 11 times. The average is 7.3%. The medium is 8.2%. So this is pointing and again substantiating our belief that the bottom is in. This is the rally from the bottom, and it is a big rally, but there is big momentum. So there is good breadth. Everything about this market is showing very positive signs for a continuation of this risk on scenario. You need to see different signs. You need to see weakness. We've had this 10% drop 4 weeks in a row negative in September, but price has, last week of September, price has really found support and found it in a big way, wherein everything has been getting bought up. So that is what you want to see when it is a bull market rally, that you see a correction, you see a 10% correction, but after this you see big demand, and you see good market breadth. So we've seen that, and we have more statistics that favor a decent fourth quarter for risk on assets. In terms of the chart for the Nasdaq, what we were looking at before was this potential equal lows, which basically never came down and got tested. But we have the 50 and the 100 EMA. Price was finding support at the 50, broke back below, found support at the 100, and is broken up above the 50. We are above the anchored VWAP lows from June. The July lows are what are keeping us down. The anchored VWAP from the September highs is also something that should provide resistance, along with the monthly VWAPs. So this is what we have. We are currently below the monthly and the weekly pivot. In terms of managing risk for upside, we have had this bearish engulfing without any kind of reaction. But if price is to come down, 11050 is a significant level. Beyond that, this weekly 10860 is another significant level, which is there to manage risk. Outside of that, this can also be seen as a higher high, because we have broken the high that made the low. So we have a higher high. You can pull a fib up here and look at what significant levels you have. So either the golden pocket close to the 618, this would give us good confluence, because we have the anchored VWAP, we have this daily level as support. So if price can come down here, the other confluence we have is the 0.5 along with the 50 EMA. So these are the two nice confluences we have for a potential retracement. If we are to come any deeper to the 786, we will get confluence with the weekly level. So to play this on a lower time frame, I would say we'd have to watch price and see where we can end up finding support. You can see here again we have a bit of a head and shoulders kind of peaks being made, and we have some equal lows. So if price can come back down here to the 0.5 to come and take them, or even to the 618, there is potential to further play this to the upside. On the other hand, I would say if we'll start losing this weekly level, or we get to these equal lows and we start closing below them, rather than a liquidity grab, start closing below them, then we can look for further levels below. The significant levels lie close to, one is these tops, the February tops, which are quite a bit lower, but we also have somewhere close to 10,100 some significant support. So these are the two scenarios that we are looking at, more preferably potentially the 0.5 or a 618 retrace to catch for further upside. Here's a quick look at the dollar. We're looking at him on the daily time frame, the relative dollar, and you can see this is the high that made these lows early September, and for now you can see end of September we broke the high. Basically it's a bullish market structure play, so we have a potential higher high, but also we have a simplistic ABC correction at a very weak fib level. If this is the ABC correction of this entire move down, then this would be very bearish to get a 23% retrace. Not even, it would be very bearish. And how we can support that bearish case is once price breaks market structure down here. We start getting closes below this, I would say the dollar is on its way down, and we actually get a close below this quarterly level, and that would be very significant, and that's where we could expect some kind of acceleration, because you can see this is the key VWAP for this big dollar move since 2011. Price has found support above it, so I would say that once we do end up breaking below this is a long way down. You can see these big gaps. I've spoken about this gap before. You can see how price has just traveled very fast each time we have been in it. So it's a big gap and we are very close to it. It's something to be careful of, and I would say that if we're looking at our commodities, looking at silver, looking at a lot of things that trade against the dollar, a lot of assets, this would be something that would really fuel upside if price does end up breaking below here. So that is something very significant and something to watch. If you want to look at weakness, price should end up closing below this, and then we can start looking for downside. And if you want to look for further strength, and if you think that there might be another wave up, it is potentially a good place to be managing risk for that. For me, I'm not so interested in trading the dollar towards the upside. There is confluence here with the VWAP. I'd be more interested if we do end up breaking down over here and then building some kind of a bear flag for further downside. If you're looking for confirmation of strength, then you want this big resistance level. I'll just show you this level on the monthly time frame. So you can see it's a big resistance level. It's pretty decent. So you want price to react from this and continue downwards, because if we are breaking up slightly higher, you can see here is the next level where we can get some kind of a reaction. But essentially we could even go all the way till the 382, which is again in confluence with this. This is the quarterly block where the dollar really finds resistance. So that would be the other scenario, which would be pretty bullish. So it is something to stay aware of and basically look out for. I would not say that this is currently looking overly bearish until price is breaking below this, and I would say the other way is not overly bullish until we find support. This big, it's basically a reclaim of this big level that we lost and we turned into resistance. Okay, so you see support, we broke up, found support, broke down below, and now we're turning it into resistance. So you want to look for upside. This resistance should turn into support. Otherwise, this is a retest of resistance and a confirmation of breakdown once we break below here. For our commodities this week, we are looking at copper And what you want to see and what you want to look at for this copper is look at this big quarterly level. Just zoom in. So here, look at this big quarterly level, and we have closed above it. Price has closed well above this quarterly level, so that is something that's significant. It is bullish. You can see on this chart, it's a very plain chart. It is the quarterly level that I have on. In terms of the week, so since we hit the copper top mid-September, we've got that retrace, but we got a very strong reaction from this big weekly block. Here, this is the weekly level that led to the big move down, and we've gotten quite a strong reaction from it. You can see previously it has also acted as support. It's a decent level for price. All the way back, you can see there has been good reactions from it, so we've gotten a decent reaction from it. Let's look at it on the daily. Okay, we have the 6 hour. I'll just switch to the daily. So let's look at it on the daily. So very strong end of the week last week. We came back down to this level and just moved up pretty big. So what you would want is for price to flip this quarterly level or come back and slowly test this weekly level again, build out some kind of a base. But this is the big level to watch out for. You can see price hasn't spent much time above here. It's essentially about a month that we spent up here. So you want price to reclaim this quarterly level. If we can reclaim $3 on copper, I would say that there is decent potential for continuation of this trend. If we look at it on the lower time frame, we have quite a high monthly pivot, the weekly pivot, and price is just kind of moving around the weekly pivot for now. So this has been a strong move, but you can see that the move down was pretty strong as well. So in terms of market structure, quickly I'll look at the 4 hour. So in terms of market structure, this then becomes the level to break. But if you look at the correction, I think this is a valid and significant correction. I'll quickly just build out a channel here to see if there is any possibilities. Yeah, so it does look like there is potentially a ramp here as well. Let's see if there's some other highs which respect this better. Yeah, so it's quite a clean channel. Should have looked at this and drawn this earlier. It's a very clean channel over here. So if we can get above the mid channel, which is very close to the monthly pivot, there would be a decent probability for upside. For now, I would say the price probably wants to fill up this space a bit and then move up to this quarterly level. So for downside, this is the level to lose. We've gotten a good reaction from here, but this 2.85 level, if we lose this on a closing basis, we'll also be losing this very clean channel, and then that's when we should be looking for downside. But for now, if we can fill up this gap, get a potential long at 2.9, I think about 2.9 is a good level. Yeah, that's pretty bullish. So 2.9, the 0.5 retrace, this is something that we could be looking at as a nice support resistance flip on a lower time frame along with the 0.5. So if we do get that, price does end up consolidating here, we could end up looking, and you could end up compounding a potential long once price does end up finding support over here.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!